Assalamualaikum and hi everyone. For my part, I will explain about unit trust. First of all, unit trust is a collective investment scheme where funds from many investors are pulled together and invested in a diversified portfolio such as equity, bonds and money market instruments. These investments are managed by professional fund manager. Next, the purpose of unit trust is to provide investment opportunity, especially for small investor, to diversify investment and reduce risk, and also to offer Sharia compliant option for Muslim investor. Lastly, the important in the Islamic capital market is unit trust expand the range of Sharia compliant investment choices, support the growth of the Islamic finance industry, and ensure that funds are managed according to Sharia principle.
Good day everyone, my name is Norazani Chikamarudin and my matric number is A2A3242. Today I will present about the guideline on unit trust. First, the role of the Securities Commission or SC is regulate and monitor all unit trust operation. They provide license and approve fund managers, ensure compliance including Sharia requirement, and protect investor from fraud. Second, the key requirement is a unit trust is open to Malaysian citizen aged 18 and above with a minimum investment of RM100 Malaysia to RM1,000 Malaysia and a valid bank account. The fund must be managed by licensed fund manager, follow SC and FIMM guidelines, and investment risk must be disclosed to investor. Lastly, the example of unit trust guideline. Every fund must be structured under the Capital Markets and Service Act 2007, and fund managers are required to conduct regular risk assessment based on SC regulation. I think that's all for my presentation. Thank you.
My name is Muhammad Ishaq bin Zamari. My number matric is A24A3804. Today, I would like to present about advantage and disadvantage of unit trust. For the advantage, first is easy access. Unit trust allows small investors to participate in the capital market without needing a large amount of money upfront. Instead of directly buying stocks or bonds, which usually require higher capital and more knowledge, investors can begin with a relatively small sum, sometimes as low as RM100 or through monthly contribution. This feature makes unit trust accessible to beginners, students, and those with limited funds. Next is professional management. The investment in unit trusts are handled by experienced fund managers who possess expertise, market knowledge, and access to advanced financial research tools. This is particularly beneficial for investors who do not have the time, skill, or resources to analyze markets on their own. Fund managers are responsible for deciding what to buy, sell, or hold with the goal of maximizing returns while carefully managing risk. Lastly, for advantage is diversification. A unit trust typically invests in a wide variety of assets such as shares, bonds, property, and money market instruments. This diversification has spread the risk since poor performance in one asset may be balanced out by stronger performance in others. Such diversification is especially valuable for small investors who may not have enough capital to build a diversified portfolio on their own. Next is disadvantage of unit trust. First is market risk. The value of unit trust is directly influenced by the performance of their underlying assets. If the stock market or other sectors in which the fund is invested experience a decline, the unit price will also fall, resulting in potential losses for investors. Even though diversification reduces risk, unit trusts are still affected by overall economic downturns. Next is no guaranteed returns. Unlike fixed deposit or savings accounts, unit trusts do not guarantee profits despite being professionally managed. The returns are still subject to market conditions, which means investors may end up receiving less than their original investment. Furthermore, the past performance of the fund does not guarantee further results. Lastly is management fees. Investors in unit trusts are required to pay sales charges when buying into a fund as well as annual management fees for the ongoing administration of the portfolio. These costs are deducted from the fund's asset, which lower the net profit received by investors. Over the long term, High fees can significantly reduces the total returns.
A real estate investment trust, or REIT, is an investment scheme that collects funds from investors to be invested in higher value property. It combines real estate and stock investment. Islamic REIT, on the other hand, follow Sharia principles, making them free from user claiming and other unlawful activity. The structure of REIT include the property themselves, such as shopping mall, hospital, or office. A structure protect investor interest. A management company handle operation and unit holder are the investor. The main function of REIT are to provide property investment opportunity for small investors, generate passive income from rental, remove the need to manage the property directly, and allow easy buying and selling for unit on Bursa Malaysia. Example for Sharia REIT is Malaysia are Al-Aqsa Healthcare REIT, Al-Salam REIT, and KLCC Property Holding. In short, REIT gives investors the chance to invest in large-scale property allow cost with enjoy passive income in a simple and Sharia-compliant way.
Assalamualaikum and good day everyone. My name is Mohammed Fadli Haziq bin Zafri and my matrix number 8248569. For today, I'm gonna talk about guideline real estate investment trust. In countries such as Malaysia, the Capital Market and Service Act or CMSA is the primary law governing financial product. This act grants the Sharia Advisory Council SSC the authority to review and approve all Islamic investment products include trade. The SSC ruling are legally binding, ensuring that an Islamic red asset and financial practice comply with strict ethical and religious standard. Therefore, an Islamic red must adhere to both conventional financial regulation and specific Sharia rules, both of which are legally enforced.
For my part, I'll talk about the benefits and risks of real estate investment. Starting with the benefits, real estate can give steady cash flow from rental income, and usually property values go up over time. It also protects us against inflation. There are some tax benefits, and we can use loans to buy property, which means we don't always need to pay everything upfront. Plus, it's a good way to diversify our investment. But of course, there are also risks. For example, the property market can go down and selling a house takes time. It's not like selling stocks. The cost can be high because of maintenance or repairs. And sometimes we might face problems like vacant units or difficult tenants. Interest rate changes and new regulations can also affect how profitable the investment is. So overall, real estate has good potential, but we need to be careful with the risk as well.
Assalamualaikum warahmatullahi wabarakatuh. My name is Nur Aisha Nibatul Zulkifli. My matric number is A24B2949. Now, I will explain the guideline on trust deed, which is an important framework issued by the Securities Commission Malaysia. Firstly, the guidelines serve as an official handbook. It clearly states what a trust deed must include and how it should be written. Most importantly, it sets minimum protections for investors and ensure transparency, fairness, and compliance with the law. The main purpose of this guideline is to ensure regulatory compliance with the Capital Markets and Services Act, or CMSA, and Securities Commission requirements. It protects investors' right under collective investment scheme, ensure Sharia compliance for Islamic funds, and define the role of trustees and managers. Another important purpose is to promote transparency in fund management, which builds trust between investors and fund managers. Finally, the objectives of the guideline are quite comprehensive. They aim to ensure compliance with CMSA and SC guideline, protect investors' rights while ensuring fairness, clarify the roles, duties, and powers of trustees and managers, ensure Sharia compliance for Islamic funds, promote transparency, accountability, and good governance, and provide a standardized framework for trustee. In summary, the guideline on trustee is designed to safeguard investors, promote fairness, and ensure that fund management practice remain transparent and accountable. That's all from me. Thank you.
Assalamualaikum. My name is Nur Amin Abdul Aziz. My matric number is A248319. We continue with key components and type of trust deed. Number one is parties to the trust. It has name
and details of the issuer, trustee, and investor. Number 2, covenant of the issuer is obligation like timely payment, compliance with law, and maintaining financial trust. Number 3, role and power of trustee is duties of the trustee to act in the best interest of the investor. Number 4, right of investor like right to vote in investor meeting and right to receive payment. And lastly, event of default is condition under which investor can demand repayment. Type of trust deed. Number 1 is Islamic trust deed. It means ensure that the sukuk structure like mudarabah, musyarakah, and ijarah complies with Sharia as ruled by the SAC. Number 2, unit trust deed, which govern under the CMSA 207 and guidelines of unit trust fund. Number 3, property trust deed. In Islamic REITs, properties must comply with Sharia. And lastly, conventional trust deed. In the Islamic capital market, this form has been adapted into Islamic trust deed to ensure Sharia compliance.
Assalamualaikum. My name is Arif Haikal bin Asrizani. My matric number A24B3000. Land on trust deed provide legal safeguard for investor by protecting their right and interest, while also ensuring Sharia compliance to prevent any involvement in haram investment. At the same time, they help reduce mismanagement risk through clearly defined responsibility and obligation for trustees. This measure in turn boosts market confidence as investors can rely on a transparent and reliable framework. Furthermore, the guidelines support fair dispute resolution, ensuring conflicts are settled justly. Finally, the inclusion of standardized clauses for Securities Commission strengthens regulatory oversight and promotes consistency across the market. These are important because they protect investor funds and rights while ensuring compliance with the CMSA, Security Commission, and Sharia principles. They are built trust in the Islamic capital market by preventing mismanagement and defining clear governance rules. At the same time, they aid regulatory monitoring and ultimately support market stability.